Hi, everyone. This is Mathis Connor with Connor Management Group. And this week, we're going to look at the best overvalued stock to sell right now. Today is Monday, July 27th, 2015. And here in the opening slide, we see that this company is in the drugstore industry, and we see its 6-month downside potential at negative 49.8%. Yes, that is a pretty large number. And we went over our numbers again and again just to make sure. But that is what we see as its downside potential. So even if it doesn't quite reach that number, it is a possibility in our view. And this is definitely a stock to sell right now, in our opinion. On to the next slide. And we see that the name of this company is Rite Aid Corporation. The ticker symbol is RAD. And once again, this company's in the drugstore industry, and we see its 6-month downside potential at negative 49.8%. Going on to the quick facts slide, here's a business summary description. Rite Aid Corporation is one of the nation's largest drugstore retail chains with 4,570 drugstores in operation in 31 states. The company sells prescription drugs and a range of other merchandise, including over-the-counter medications, health and beauty aids, personal care items, cosmetics, household items, food and beverages, greeting cards, seasonal merchandise, and other everyday and convenience products. So yes, Rite Aid seems to be one of these typical drugstores that I'm sure most of them have visited at one time or another. Their website is www.riteaid.com. That's RITEAID. The company is headquartered, in Camp Hill, Pennsylvania. They were founded in 1927. They have been around a while, and the number of employees they have stand at 50,730. On to the metrics slide. Over the last 12 months, the annual revenue for Rite Aid totaled $26.7 billion. They are a sizable company. The net income over the last 12 months was $2.1 billion, and their cash from operations was $777 million. The operating margins in 2014 were 4.7%, and in 2015 they're tracking to be 4.5%, a slight decrease. On to the valuation metrics. The trailing PE ratio for Rite Aid right now stands at 23.5, and the forward PE ratio stands at 34.9. So that is a substantial increase. And what that means is that analysts on average expect the earnings to decline quite a bit over the next 12 months. The PEG ratio stands at 4.3. That is definitely a high number. Definitely not a value buying opportunity is what that number suggests. The price sales ratio is at 0.3, which is actually quite low. And the price to book ratio is at 56.3. And that very high ratio is driven by the fact that the company's shareholders' equity value is pretty low, which gives it kind of a poor financial statement profile. The enterprise value to EBITDA ratio stands at 11.0. The dividend yield is at 0%. Rite Aid does not pay a dividend. On to the products and services slide. What we have here is several photos and some excerpts from recent investor presentation reports. We have the Rite Aid Pharmacy logo. We have a photo of a Rite Aid store. And we have another picture of their national footprint. Basically, Rite Aid is in nearly every state east of the Mississippi River, with the exception of Florida, it seems. And it also has a strong footprint on the West Coast as well. Very little presence in the mid-United States. Additionally, we have a photo showing some of the ongoing store renovations that they're making. And additionally, there's an excerpt here talking about a merger that they are pursuing with a company called Envision RX. And Envision RX is a pharmacy benefits manager. And basically what that business does is handles fulfillment of drug prescriptions for the employees of large companies and corporations. So Rite Aid is trying to go into that business to diversify their revenues, as well as pick up additional revenue streams, particularly from Medicare. On the next slide is the price chart for Rite Aid. Over the last 12 months, Rite Aid is up about 29%. The company has gone up from around, say, $6.50 all the way up to around $8.50 where it is now. But it was not a smooth ride. Approximately 9 months ago, the company had a pretty strong pullback from the $6.50 level to the $4.50 level because their forward outlook was lowered. Management had thought the next fiscal year wasn't going to be too well. And then about 3 or 4 months later, management revised their fiscal 2015 outlook and raised it again, which brought the stock back up. So, we are a bit concerned with Rite Aid, which is why we have it in this category of the best overvalued stock to sell right now. And we'll move to the next slide to get to some of that. Okay, the why now slide, the Bear Rationale. These are reasons for why we think Rite Aid is a stock to sell right now. Going forward over the next 12 months, we see the company having decreasing cash flow per share. The company is still going to expect it to increase sales, but its cash flow is expected to decrease. Similarly, its earnings per share is also expected to decrease over the next 12 months. So basically, one of the things that's going on is that the margins for its business with some of its generic drugs has shrunk considerably, and that is putting pressure on the company's cash flow as well as its earnings. So consequently, as a result of those two factors, we see their near-term valuation metrics, as we referenced earlier, as being high, which puts pressure on the stock to be sold. So decreasing cash flow per share, decreasing earnings per share, that's the main driver. Those are the main drivers for why we think that this is a stock to sell right now. And onto the summary slide. The financial statement quality for Rite Aid, we rate as poor. The debt they have due over the next 5 years totals $170 million. And for 2015, we expect them to earn around $250 million. However, the interest on their total debt is expected to be somewhere in the neighborhood of also around, $300 million. So they don't have a lot of cushion for, when it comes to their financial health. And additionally, as we mentioned earlier, their shareholder equity only recently became positive. It was negative over the last couple of years or so. The operating margin trend we'll consider flat, although it's expected to come down slightly. The price pattern trend we showed, it is increasing, but we would be surprised if it continued to increase. And our overall market outlook is flat. We are seeing more overvalued names than undervalued names, but the economy is continuing to perform decently. So we don't expect there to be any major pullback anytime soon. The recent closing price for Rite Aid was $8.75, and our 6-month price target for the company is $4.38. So that gives this company a 6-month downside potential of negative 49.8%. So it's for all these reasons that we believe that Rite Aid Corporation is the best overvalued stock to sell right now. We hope you found this presentation helpful, and we'll talk to you soon. We'll talk to you again soon. Take care.